Let's talk about where we are now, what we said in 2011 in terms of the private equity space. Let me begin by asking how much was raised in 2011 and how does that compare versus the previous year?
Thank you, Godfrey. In 2011, we saw new commitments to private equity funds totaling just over $2 billion US. That was raised through a combination of the traditional follow-on funds that second-time or third-time fund managers like a Braid or an Ethos, Actis, right, raising their follow-on funds, but also from new emerging fund managers as well. Probably less than 10% of that number went to new fund managers, right, and we're seeing more re-ups into existing managers on the continent.
Who is getting interested in Africa here? Where is that money coming from? Are we beginning to see different types of investors beginning to look at the African continent? Like we hear in all other parts of the conversations you hear, it's no longer just about the West, it's also about talking China and India.
No, Godfrey, look, there's certainly an increase in terms of the talk. But has it played itself out and actually what I say cash in the bank? Yeah. Hasn't been the case. I had the opportunity of chairing a panel at the recent Kenya Super Returns Africa Conference in Nairobi in end of November, and you would see the new faces, that right, where they be fund of funds from Europe, some of the sovereign funds from the West, from China, from Singapore. They are starting to show up and listen to the story, but in actually making commitments to the continent, yeah, it's still a wait and see.
Where are they interested in? The story we often hear is that, you know, Africa is beginning to show on the consumer front, we're beginning to see more interest on that front. But of course, we do know that Africa does suffer from an infrastructure deficit.
Well, I think therein lies the opportunity, Godfrey. The view is certainly there's 1 billion plus potential consumers here on the continent. Yeah. And with the saturation in markets like India, what some would call over-investing in China, this is the new frontier. There's absolutely nowhere else to go, and obviously the sovereign debt crisis that's happening in Europe and the U.S. Says that Africa, from a consumer perspective, is the right play. And certainly the success in sectors like telecommunications, be it right, MTN or Vodacom, their success has been documented and well understood. And the belief is that that will carry over into other sectors of consumer-facing industries, be that agribusiness, right, foodstuffs, be it housing, financial services, et cetera. Where the interest is and the opportunity in many of these investors is not just the consumer, but it's also what you just highlighted, which is the infrastructure challenges, right, that present an investment opportunity, be it toll roads, be it ports and dams, train infrastructure. One of the challenges that we face in South Africa about moving goods, be it coal, manganese, what have you, from the interior of the country to the ports for export, is that very infrastructure. Yeah.
Now, Will, if Europe is not growing, if the Americans are struggling a little bit, we do know they seem to be getting a little bit of traction, and China and India are oversaturated, surely shouldn't more money be coming into Africa? Is Africa attracting the amount of money that one would expect in this kind of an environment?
That's a loaded question, Godfrey, because as an African fund manager, I'll always say there's not enough. However, the reality is that it's still talk, and the amount of follow through in terms of the demand for new investment, yeah, in terms of the opportunities to invest in, yeah, is not being met by the supply. And there's a lot of money that's still sitting on the sidelines. I mean, the number that we talked about for 2011, roughly 2 billion, just over 2 billion in new funds raised. Yeah. We may push 3 billion in 2012. Right. There's at least 200 general partners or managers on the road trying to raise money for Africa right now. Yeah.
Is it difficult to raise money for Africa still? Or are we beginning to see the pockets loosen up a little bit? You do say that there hasn't been much in terms of a follow-up. There's a lot of talk. But when you do approach those that you do approach, is it difficult to convince them to buy into an Africa fund?
It is. It's the Africa story is accepted. You know, I think the global markets get it now. You don't have to explain to a potential fund manager in New York or, yep, London or in Asia the difference between Cape Town and Cairo. They understand that.
They're two seas, but two very different seas.
Exactly, two very different seas. But the challenge that they have is that it's competition for capital. Sure. It's in this global marketplace. An investor has the option of going to Cape Town, Cairo, or to Khartoum. And the opportunities are very easily understood in some of these other emerging markets, Brazil, India, and China, whereas the Africa story, the opportunity, very clear. How to monetize that opportunity, therein lies the challenge.
Absolutely. I mean, we have to put this in context. We're talking 2 billion or so, maybe 3 billion in 2011. But still, I mean, this is minuscule when we compare this against what we get in other parts of the world in 2010. Globally, we're looking at what? $220 billion?
Absolutely.
Africa is not getting its fair share.
No, it's not. It's not. And one of the challenges that we have as fund managers telling the story is ultimately when it goes back up to investment committee or the boards of these large pension funds or insurance companies that have these assets to allocate to Africa or other emerging markets, not many people understand the risk.
Right.
And it's that perception of risk that's still challenging, because unfortunately there are not enough shows like this one that tell the positive story. Could
that risk be understood better if we explained in perhaps in more convincing terms about the returns? You talk about the conference that you had, which was the Super Return conference on Africa. How big are those super returns?
Look, if you find the data, and it's not easily sought in these days, but fund managers like ourselves are being a lot more open to our success and our failures comparatively. And this is anecdotal data, but consistently you see private equity fund managers that are returning profits back to their limited partners well and above 25 to 30% returns.
This is dollar terms?
This is dollar terms. This is dollar terms. Now, compared to what on a global basis, on a global average, would be the mid-teens. Now, obviously, there's some economies that have outpaced that, some opportunities outpace that, but I think what also validates the asset class in terms of those super returns, Walmart is in South Africa for a reason.
Absolutely.
And they're chasing return. And so when you see the corporates, entities like Coke, Motorola have been here, Ericsson have been here for years. Chinese corporates like ZTE have been here for years because the returns are measurable and they're real.
Will, my director will kill me. 2012, how much can we expect in terms of growth percentage-wise? One word.
25, 30%.
25, 30% growth in private equity money committed to Africa in 2012.